Hi, this is Alessio. Hope you're well. In this video, we're going to take a look at the chart of the stock markets. As we know, the stock markets had a very sharp drop, a move we anticipated, and now we've seen a nice bounce to fill some gaps. So in this video, I want to draw your attention to three very important leading indicators, three important charts that we need to watch. Because if these three charts, if they start breaking down below key levels of support, that could put us on alert for something much more dangerous, something that could indicate perhaps a bigger decline to occur in the stock markets if these levels break on these three important charts. So let's dig into these charts in the stock markets. Join me. Hey guys, welcome back. So in a few minutes, I want to dig into some important charts and the important implications of these charts for the overall stock markets. Before we go into that though, let me just tell you where I am. I've come to a nice part of England in Kent called Forest Mere, and it's a great place to come just to get some relaxation and away time from London. Let's take a look on this side. Just an amazing view of this lake and beautiful trees here as well. All right guys, before we dig into the charts, just two important things I want to mention here. First of all, I want to thank those of you who sent me messages and comments of thanks. I had some great comments from some of you who said that my warning back in June and July about the stock market saved you from jumping into the market at the worst possible time. So some of you said that because of my warnings back in June and July, you managed to lock in some profits and also avoid and stay safe from the big drop we had recently. The second thing I want to talk about is I had some childish and some silly comments from a few people who essentially said that my warnings about a big drop were a bit early, that I did not catch the exact top in the market, which, as I'm sure you know, is so ridiculous and infantile. By the way, I know some of you say to me, Alessio, why do you have to address these trolls and these imbeciles on social media? Guys, the reason I want to do it is because they're making an unfair point. I know you're intelligent and sophisticated people, and I realize the comments from trolls are just a minority. Nevertheless, what they're saying to me is something so ridiculous and so unreasonable that I need to address it here in these videos. First of all, we should remember, guys, that I don't have a crystal ball. We can't jump into a time machine or look into a crystal ball and figure out what's going to happen in the future. We have to use our rules in technical analysis, and I do my best to give you a reliable analysis in these videos. So as I'm sure you probably know, I've been bullish on the stock market from January and February of 2023. Here's a screenshot of my members video back in February of 2023 when I said at the time that I was looking for a rally towards all-time highs for a wave 5. There's a lot of data. There's a lot of the data that suggests there's a high probability of a rally, of a 20% rally in the stock markets by the end of this year, potentially at least by December of this year. That's my perspective for a bullish rally towards this region, 4457 to 4311, and even to test 4750 for the wave 5 and all-time highs for a 20% rally by the end of this year. That is precisely what happened, by the way. Now, it's true. In October last year, we had a false signal, a false bearish signal, and that's why I got bearish temporarily. Again, nobody can be right every single time. That's why I changed my mind quickly in November. Just 2 weeks afterwards, in November, I changed my mind and became neutral. And then in late November, early December, I became bullish again. So I remained bullish from November, December, all the way to June when we hit our targets of 5,400. In fact, here's a very brief clip of my video when I mentioned 5,400 back in the spring of this year. Looking for a move eventually to the levels I mentioned. The yellow line is the rule of 7 projection that I mentioned, 5337. The brown line for me is another key target I have, 5,403, and that's based on the 2618 extension. I'm still looking for one more push higher into that region. 5337, the rule of 7 projection, and 5,400 in the next several months. Now, here's the thing. As I'm sure both you and I know, the markets went beyond 5,400. I realized that. Of course, the markets exceeded my expectations, and the S&P went higher from 5,400 to 5,670. So yes, it is true. I did not catch the exact top in the market. First of all, as I'm sure you understand, it is simply impossible for any trader or analyst to be able to catch the exact top in the market, unless with sheer luck. As I explained in my previous video, trading, investing, and analysis is not about catching tops and bottoms, okay? That is not what this is about. So if you think of a burger, all we're trying to do is catch the meat in the middle, not the bun on the top, not the bun on the bottom, just the meaty side in the middle, okay? Same thing in the markets. We're not trying to catch the exact tops. We're not trying to catch the exact bottoms. That is impossible because we're dealing with an uncertain, chaotic, and unpredictable market. But I do want to address this point that some of these nincompoops and trolls on social media are making right now. That Alessio, oh, you got out a bit early at 5,400 when actually you could have waited and got out at 5,670. So there, haha. Let me just address this point because when I first read these comments, my initial reaction was this.
You dumb mother.
Let me just address this point very briefly. Supposing you got long, supposing you got into the market at 5,400, at the very point, which was my key target for the S&P, at what point would you have sold? At what point would you have exited? Now, I realize some of those trolls and nincompoops are going to say, well, I would have got out near the top. Oh, really? Based on what? You see, guys, it's all very well to look in hindsight and point and say, yeah, that's the top. Everybody is a genius in hindsight. But when you're doing this in real time, when you're trading and analyzing the charts in real time, as we did, we don't know where the top is. Nobody knows where the top is. By the way, I should say that in the member videos, I did warn that we had reached extreme overbought conditions based on the RSI 34 setting, as you can see there on the chart. So I was warning that the risk was extremely high of a big drop in the stock market. And this happens very rarely. In the past, usually when this occurs, the odds increase of a pullback, some kind of a correction or a significant correction. So I was warning, even at the time in mid-July, that there was a strong risk of a big decline, a big drop in the stock markets. What do you think these guys on social media were saying? The majority of them were saying that the S&P is going to go to 6,000. They were not expecting a drop. Let's just think about it for a moment. If you had got into the market, if you'd bought at 5,400 and you stayed in all the way to the peak, at what point would you got out? Again, remember, we don't have a crystal ball. We don't know where the exact peak is. Ask yourself this question. Where do you think these nincompoops and these trolls would have got out, would have exited the market? I can tell you this much. These guys did not get out of the market because most of these guys don't have a stop loss. Ask any brokerage firm. They'll tell you the majority of their clients don't have stop losses. They don't use a stop loss, which is why they lose money. Here's the thing, guys. Professional traders use a stop loss. Even investors have an exit strategy. But most people out there, again, the trolls and the nincompoops, they don't have a stop loss, which means this, guys. They would not have kept any of their profits, any of their gains from the S&P move from 5,400 to 5,680. Either their stops would have got hit when the markets dropped heavily, which means they either made a loss or break even, or, and I think this is much more likely, they had no stop loss at all, which means not only did they sit right through the big drop that occurred, but they were buying at those very highs. They were buying near the highs, expecting a bigger rally towards 6,000 on the S&P. That's what they're really thinking. And we know this from the comments on social media. Most of these guys were buying Nvidia and Tesla at near the peaks, which means when the big drop occurred in late July to early August, they had zero preparation for that. So they made a bigger loss than they imagined. Intelligent people like you, my audience, were prepared for this big drop in the stock markets. We got out of the market just in time before the big drop occurred. Yes, it's true, we did not get the exact top, but so what? We stayed safe from the volatility, let the market drop, and look for a better opportunity. All right, guys, I'm sorry that section got a bit long, but it had to be said. I had to get off my chest. So let's take a look now at three very important charts, which are leading indicators for the stock market. And I'm going to explain to you why if certain key levels on these charts start breaking, if key levels of support start breaking, this could put us on alert because that could be an early warning sign of something potentially bigger, something much more dangerous occurring in the stock markets if those key levels break. The first chart I want to bring to your attention is the Dow Jones Transportation Index. Now, if you watched my previous videos and if you're familiar with the Dow theory model, you probably know why we talk about the Dow Transportation Index, because transportation is very sensitive to shifts in the economy. So that's why we need to look at the transportation index. It can often provide some valuable clues about the markets before something actually happens in the stock market. So that's why it's one important leading indicator. You will notice the Dow Transportation Index has been stuck in this kind of large wedge pattern on the chart. So the key level you want to watch is the lower part of that wedge is the recent June lows, about 14,500 or 14,550. Watch that level carefully because it's an important support level for the Dow Transportation Index. If this key level breaks in combination with the two other charts I'm going to mention as well, then that's going to be a major red flag, a big warning sign of something bigger. I'll come back to this point. The second important chart and leading indicator for the stock market is IWM, or the Russell 2000 ETF, which happens to be the small caps. As you know, small caps can often be an important leading indicator for the stock market because it's not just large cap stocks like Apple, Microsoft, and Google that are important. We need to pay attention to what's happening in the small caps. Usually, weakness in the small caps, especially if they start breaking support, can be an important warning sign. So watch small caps, watch IWM, and watch this key level on the chart. That's an important level of support, about 191, which is the April lows. So if this level at 191 starts breaking on the Russell 2000 ETF, that could be another warning sign for the markets. That could be almost like bullets being fired at the stock market. The third important chart I want to bring to your attention is the chart of the S&P Equal Weighted ETF, or RSP. The difference between this chart and the main S&P cash index is that the weight is distributed evenly among all the S&P 500 stocks. So that's why this chart of RSP can also be a very important leading indicator for the stock market. Watch the key levels of support at about 158, 161. If RSP, the S&P equal weighted, starts breaking down below this key level support, the recent low we made, for example, at 161, and the other low we made at about 158, if both these levels of support starts breaking down on this chart, that's another major warning sign. Again, bullets fired at the stock market. Now remember, guys, we should not just watch one of these charts in isolation. We should watch all three charts. Again, the Dow Transportation Index, the key level at 14,500. IWM, the small caps, the key level at 191. And RSP, the S&P equal weighted, the key levels at 158, 161. If we see a breakdown below support on all three charts, again, all three charts, that could be a major early warning sign of increasing risk and danger in the stock markets. That could be a major warning sign of a long-term top in the stock market. It could also be a warning sign of a reversal in trend into a potential downtrend or bear market. Again, if these levels break on all three charts. Now, again, remember, I'm not saying that's what's going to happen. Okay, I don't have a crystal ball. I don't have a time machine. I can't see into the future and I cannot tell you what's going to happen. All I'm saying is be aware of these three charts. Be aware of these leading indicators for the stock market. Because once again, if these levels of support start breaking down on all three charts, that could put us on alert on something much bigger potentially happening, something much more dangerous in the stock market. And I think in the next several weeks, as we head towards September, maybe the end of September, we can have a much better, more clear picture of the stock markets. I hope you enjoyed this video. Again, I'm sorry about the long preamble at the beginning of the video, but it had to be said. And by the way, guys, if you haven't yet subscribed, please click subscribe and also enable the bell icon for notifications. Thanks very much indeed. Bye for now.